All right, Tuesday, um, April 25, 2017. I'm gonna run through some charts here real quick. All right, bond market here. Basically, in my ideal world, I was looking for rates to go lower from the beginning of the year until June to help out the economy in the United States. The United States runs on housing, also advertising and military spending for sectors in that I look at anyway. Um, uh, when bonds turn down, interest rates go up. When we raise interest rates, it's on the front end, overnight money, and then that filters through to the back end. When you hear inverted yield curve, that's cautionary of entering a recession. Overnight money, you can't get 30 years on overnight money, the spread. So for right now here on the bonds, what I would do is I would mark down here, take some profits on the short positions here. ADX was running pretty hard, so looking for probably just some sort of bounce here. For right now, if things do turn ugly in the equity market for any reason whatsoever, I expect people to run back into the debt market. The only thing I could see where we don't, rates aren't favorable to the economy would be as if we get a North American or Northern Hemisphere drought this year and affect crops. So something that the Fed can't control, food inflation. I'm a laissez-faire kind of guy. I mean, you can tamper with it and whatever, but just let it do its deal. The markets they'll self-correcting. So on the bond market here, just look for a slight bounce here. Take profits, and we'll find something else to play with today. Grain market's basically the same thing, looking for seasonal here. I'm looking for a drought possibly next year. And then a stronger dollar would also pressure commodities for right now. So they're all kind of chained together, but I believe the secular bear market in commodities is continuing here. We might get a washout this year and then the drought next year on a 3.5 year cycle, 4 year cycle. Fives, basically the same thing, short the front end on here. Twos and fives, short bonds is kind of sell some housing on there. Bean oil, same type of deal, seasonal on here for right now. I'm looking more for a May high versus a July high, but like I said, it's all about the drought, something you can't control on here. So, and then bean meal and stuff. So anything, obviously, just taking some off the table here. Just trying to clean stuff up, basically. Positions, a couple of week or two is basically it, how I look at it, just swing type trade. Because I assume everybody's just starting out because I'm educational, I'm an analyst, I get paid not to trade, so I have non-biased type deal. I do trade a little bit of Forex, but I think that one works out. What's this here? Notes. So we have bodies here. Here's the money flow. The green is the money flow. Red is the ADX. ADX tells you if you were in a trending environment. So if you might snag something here, this as ADX goes up, it tells you that you're in a trend, so you can hold these positions longer. These are 2-hour charts. I like to personally look at weeklies in my older age. I've learned how to look at the big picture, right? Buy equities for a decade and shoot for 900% return on each individual share you buy is kind of how I look at it. A lot of selling in the background, though. Those long-term followers know about the pink dots on the NYA and the NASDAQ composite. And two schools of thought. It's either headed higher with everybody getting frothy and buying everything with the underlying issues from the McClellan oscillator, or we have some serious internal divergence in those stock markets is being held up by the indexers. Notes, same type of deal here. These are 10 years. I would rather short the front end than short the back end for right now. I'm still, like I said, I'm still looking for, it's a seasonal deal into June with housing and everything here. This helps out housing here, the bounce. It does help out though, but and beginning to come off again, and that pushes up 10-year rates on here. And beans, the same type deal. I don't think they'll clear $10 through into May, but beans have a seasonal here besides the typical 4th of July with corn and wheat and things of that nature. So maybe some IV to pick up here in the grain markets. I think I have to do my homework. I have to go find USDA stuff. So same type of thing, deal with twos, weakest of the bunch. What I wrote here was that it didn't get as big of a bounce compared to like bonds and 10-year notes. So the pressure is here. Like I said, remember we have FOMC also, and wheat. Wheat, from coming off of Commitment of Traders report, a lot of shorts, and it's holding up. I would rather buy something, establish a position in wheat under $4 here, but it's had a pretty good range. I was looking for 440. If you're a producer, to do some hedging on here. Remember, the markets are all about locking in prices. And you know what you have. Aussie dollar rolling over goes along with commodities here. Commodities roll over, so the Aussie, remember, this can fall another 2,500 pips, ticks, whatever. You have to go and look back at the lows of what's at 2000, 2001. I don't know how deflationary we'll have, but we shall see. British pound here, British pound and the Mexican peso are my two best bets for 2017. British pound and also long Mexican peso. Basically, British pound walked into 31-year low. Anytime I hear multiple decade higher low, mostly low, I get involved because this commodities. This is a fiat currency, unfortunately. Commodity, I don't expect soybeans or gold or anything to go to zero. So my risk is there. My risk is at a 30-year low per se. And if you get something like silver at $3 an ounce or whatever, you can put up 100% of the contract, that kind of thing too. So any weakness on what do we have here? So all kinds of stuff, Scottish stuff, blah, blah, blah. I'm a technician. I don't really listen to what's out there, what's in the playbill. So any elections or whatever, blah, 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 yada, yada. The Brits got what they wanted. Their currency fell apart. My target for basically is 131, 133, and that's coming off of the lows here. So that's just the first round of targets. Back in 85 to 90, I think, the British pound doubled after pulling the same stunt with Saudi Arabian oil and all that fun stuff. Right? Go back, look at that time period here. Canadian dollar, any type of bounce on here would go along with oil. Oil and that sold off pretty hard. Commitment of Traders report. Too many people looking over the same side of the boat here. For right now on the Canadian dollar, the bounce would go along with oil. I think I'm looking for a bounce today in energy. So I mostly assume everybody's a day trader. So you get in, you wake up. I'm on the West Coast, so I get up for London, and about 3 or 4 minutes into the New York Open, I'm done for the day. If gold is down $10 in Tokyo and $20 in London, it's going to be down $30 in New York. So I short gold in London and I cover, the obvious, right? Newbie going to come in and dump gold. I will take it. Unless it's a trend like here, nice little ADX here, right? When it goes below 20 here, it's a reset. I'll call it a reset. Once it broke the low here, so you have a continuation of the trend, and money came out of it. Obviously, people selling it off. You know what? I'll put a little. What's it at here? So let's see. We'll buy number 2. I'm just looking for bounce this morning, and come on, 37.5, I guess, whatever. All right, just looking for bounce. What do we have here? What, 40, 60 higher, so. All right. In euro, this has basically been the same type move, from 6 to 9, on the upside here. We're talking 10, 11, 12 would be my next targets if we broke through 109. We'll say 34 or 35. That'll work. All right. What do we have? Take partial profits. Got to buy here. Pause and okay after the hard run up there. So we have 2 weekends of a hard run in the euro. So on the next run up in the euro, 2 ways of going at it. That would be either writing calls against this if you want to stay in, if you're thinking it's going to go to 115. I just in the timing and everything in regards to interest rates and things of that nature, FOMC, I would lean that we'd go the other direction. Just like the euro bounced on the French election, we have FOMC. So all of a sudden you have that thing. We raise rates or whatever, that's the plan stand. So any more strength in the euro, I would probably fade that and have a bias towards the long dollar here. Japanese yen, carry trade and all this stuff. There's been enough shakeout going on here that I'm sure the carry is beginning to be kind of somewhat of a problem here. 124 to 104 back up, that can get kind of painful for risk managers here. As the Japanese yen future goes higher, the carry trade would go lower. And remember, we're a lot of countries, federal banks, reserve bank, central banks, interest rates are all around the same little margin, a small percentage. So the carry outside of the Mexican and Turkey, things of that nature that are high interest rate payers. A lot of the stuff is going to adjust, just like people who go after the Aussie yen in regards to the stock market in the United States. Go hand in hand. Watch your correlations here and things of that nature. But on the Japanese yen, like I said, I expect the US dollar to get stronger. So this, of course, would come off. Okay. We'll just throw this out. I don't know, 180 on the US yen. We're talking for my weekend videos and things of that nature. I kind of philosophize, expound or whatever, verbose on the longer picture. When you get older, you can chuck away decades pretty easy here. So the youngsters, this is what I see going on in the next 10, 20, 30 years. I'd be a futurist because a lot of everything cycles, right? Real estate in the United States is 18.3 years. Drought, that kind of thing, 3.5, 4 years. The currencies trend and, economic, it used to be a kitchen cycle of like 40 months, the typical business cycle. Now we're stretching out 2 of them. If we need to put money in people's accounts, do we really need to ship them a card? I have 3 safety things on my card, and I make 2 purchases and it freezes, 2 purchases, it freezes. There's an IT glitch. You buy gas with or you buy groceries with the chip because I have the new reader, and you get gas with the swipe because they haven't invested into their gas, the money part of it, and it'll freeze because I use the chip and the swiper at the same place, and they're confused. So we'll just say that I'm not the only one out there that has issues. All right, so what do we have here? Mexican back to short. Okay, so what it is the Mexican pesos had a pretty good hard run up. We got a double top here. You know, I would really like to see this thing come down even further. You know, that kind of deal. Maybe get the MACD to kind of bottom out again here. I wrote down back to it. That's what I would, in my ideal world, I'd like to see that here. This would be short US dollar Mexican. You collect the interest rate. 6 points. I think it's 6 points. Well, check out with your broker. And then in America, we get up to 50-to-1 leverage. And so that'd be what, 300% a year? 300% a year, and you get the short, so you get the capital gains too. I love this work. Boing, boing, boing. Here we go. In regards to those people who are playing the 50 bagger, this is what you want to have happen. The NASDAQ, or excuse me, the Kiwi New Zealand dollar, you want it to roll down. Look to add more on any bounce up here. And then from yesterday here, to add into your position, this is a pretty good to add in positions there. Let's see, Swissy franc. I wanted to see 102 here in the last couple of bounces, just due to the fact that I'm being greedy. It's one of those things that this is just money sliding in. You have France, whatever, the Europe deal. You have the euro, the pound, and the Swiss franc, and it's in play by the capital is something fierce. The commodity run, all that fun stuff. You know, nothing's really changing, right? All stays the same. But yeah, I'd get back up to 102 or something like that. I'd like to short it. It's still over. You know, watch out, I guess, for SNB too, their national bank, to come in and intervene. All right, here's Brent. So we got Brent to get back up to the 55, 56 area here. We didn't get the breakout, so you know, I was basically leading that there's nothing but air on the way up here. Basically now scaling down with the shorts. ADX is turning down. I wrote yesterday that was turning up again, so I thought that we'd see a precipitous decline. Trading under pivot, purple pivots, basically have a weekly pivot and daily pivot, and then red is resistance and blue is supports. And just more like, all it is I'm lazy, you know, moving averages, so I don't have to draw a trend line. And the shaded areas for you market profile folks, this is, I call it the happy place. This is your point of control. Where the most amount of action is happening, either time spent or price. I watch all data. I don't limit it to whatever. Trust me on this one. I do all data. Because if I put out an order to sell something 4 points underneath the marketplace, I want to remember that snapshot. Oh, I love the stories I tell for hours. Yes, it's educational, and yes, it can get kind of long at times. I kind of limit this one here. Basically, one more leg down on here. You know, start taking some profits off the oil thing. What do we have today? Maybe we get something out of API numbers today. What's this, Tuesday after the close at the API numbers come out, and Wednesday EIA and blah blah blah, yada yada. But any type of bounce today, we're actually up. We're up 3 cents. Well, that's not that wasn't much fun. But 17 cents, 20 cents, it all adds up. You know, you should be able to snake out 60 to 80 cents a day, even with multiple trades on oil. That's kind of how I look at it. Crude, all right, so the old world famous short up here. Remember, commitment of traders, they're all kind of leaning towards one way. We're getting it. We basically got back down to 49. The next leg lower is going to be, basically, we'll just walk it down to 45. 45 is the happy place on, I believe, a daily basis. But it's, you know, the 49, 48, 47, 40, you know, whatever. I expect oil to actually ultimately bottom during the next recession. America has just a bunch of oil that's being secured, and in times of war, the military uses 1/3 of our fuel. Insanity, huh? But that's okay. We can't figure out another way of putting it in the hands of other people. All right, so we have the shorts here, blah, 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 yada, yada. This was an overnight cover. What I try to do as a neutral guy is try to cheerlead you to hold on a little bit longer. It's kind of like how people can hold a loser for 3 weeks or 3 months, but you get 30 minutes or 3 hours. Hell, trying to get 3 days out of people. It's difficult. Well, you had the ADX here, right? So if you get your little Pavlov's dog, oh, you know, it resets here, it turns up, we might have a trend. So you can, I try and say, look, hold on. You know, but in the process too is I have to think about what I would do. You know, hey, boom, if I picked up, you know, what is it, $1 or $2? What are we at? Yeah, $1, right? $1,000, you know, $1 here, you know, cover more, $3, cover more, $5, you know, that kind of thing. I believe my neck is out on the hook for oil to get to 38. Uh-oh, blasphemy, Kevin, stop that. I will handle oil around $40. It just seems that it kind of works that way. But as we get closer to the recession and the bottoming of the secular bear market and commodities, I'll fine tune it, since we're all going to be rolling over anyway, right? I mean, how much of us, how many of us are actually, I don't know, putting on positions 2, 3 years out? I know, I see your hands, and that's why you have all the money to manage. Blah, blah, yes. All right. So the overnight was short. YM moved up nicely. Now, okay. So yesterday's gap action on the way up, what I wrote down, and people have to think about this, is what happens if it's just a gap and a running start the other way? Because basically we're long on the tooth and yada, yada, yada. My ultimate goal is for the Dow, for the market basically to double here. I'm using S&P 5,000 just on a typical historical blah, blah, blah. There you have it. Move from the low. It's 4750, but I raised it to 5,000, whatever. But for the Dow, that's a different story. I don't know how Nike can be in there. Whatever. All right, so basically the story goes here is, if you remember 2 weeks ago on the Sunday, or a week ago, whatever, a week ago, we had the low, remember, gap and gold and stuff, and I basically said it was like, you know, shooting turkeys in a barrel, whatever. It was just too easy. Okay, so now we went the other direction. Okay, so here's where we actually have to follow through. Now the old world famous, you know, selling me. Well, we already have a lot of shares issues on the back end that are getting whacked on here. The index you really want to watch, though, is the NASDAQ. Is it broke out to a new high, and that's typically where the party's at. It's the Russell and the NASDAQ in this cycle. The commodity cycle is over, so the industrials and your NYA, your mature ones. The focal point is just like, for those of you that remember 97, 98, 99, it's basically the same thing. I do notice, though, that all my little 99-cent apps I bought from Apple in 2011, couldn't get my fingers on them fast enough. Then they moved up to $3.99 and $5.99, $24.99. It's like, well, how could I get long apps? Because I am. When I saw that, I almost died. I paid an $85. I paid $850 for a drum machine, and the app came out at $5.95. The jaw hits the floor. Jaw hits the floor, but that's okay. And for all of us that have pads, are you still touching your laptop screen? Oh, all right, back on track here. So, all right, so zippity-doo-dah, kaye mofo. So, whatever. If there's follow through to here, go with it. The high is 2,400. After that, you begin to because of percentages and large numbers, you begin to start talking about, 24, we'll say 50, and then 25, 30 and stuff, and things begin to get extended here. Extension, the angle of ascent increases, and that. But for right now, I will give this a day or two, but we got FOMC kind of thing here. Right, so basically the move was all the way up off the bottom. In my eyes, I'd rather stand aside and find something else to play with here. But what I do is I basically go run down and look at charts and stuff and send it out to folks. And then during the day, I run the webinar where people just ask questions and I just look at charts. I try to keep everybody on the same page. Find one thing. Just find one thing. Stick with it and trade it. Day trading to me is like having to go and hunt an elk. The premise there being that once you get the elk, you have to quarter it in fours and haul it down the mountain, besides stalking it and hitting it on target, and sometimes you might have to chase it, and guess what? You get to do that every day. So if you can snag something on here and it gets to be a trend, here you're at. So I mean, if you're long from 36 and we're up 30 higher, you put your stop underneath here and just let it run here. For me, I'm focusing more on the Russell and the NASDAQ here compared to the ES and that. Everyone can say they're long the market, but if you're in the wrong index of the bunch, sometimes it can be as wide as 20% between the S&P for return for, say, 9 months versus the NASDAQ or the Russell and that. So those are the two I'm focusing on because that's basically where we're at. We're not going to be pumping out a ton of oil. And if we do, in ships, the stock market's not going to like it. All right, so we had the old gold thing here. Each market's on its own. I don't care if the dollar goes higher, whatever. What's it do to gold? 60% correlation, 80% correlation, whatever. Okay. So I was on the short side here, stronger dollar, fade the last. For retest, add more shorts, blah, blah, blah. This is that gap higher over that Sunday where everything went to extremes. Look for retest, get that fade last. This was on the close last week, Monday close, and it just continued on, blah, blah, blah. So anymore. Now here's the deal here. This would be an ultimate 2055 off the top here. So this would be like $35, $3,500 or so. Okay, I wrote up. Okay, I'm using the same type of play for. I guess we could switch over to it. Yeah. If you want more, just subscribe. It's just that simple. We'll just say that's your tease. All right, we'll look at these real quick anyway. So since I have to anyway, I think it's on, here we go, gold. Oh, all right, FOMC. Let me see here. What's this first one here? How do we do? So we didn't get through the cloud on gold, but we got above the moving average. This is a day weekly. It's a weekly here. Horizontal target, vertical target. If I put on pitchfork here, that would be it. So this is when I turn bullish on commodities. This is the redo on it. Okay, so maybe we have ourselves 2 and 3. Okay. ABC pattern here. This is similar to 85 to 90 or 85 to 87. Gold went up as we were raising interest rates and as oil was falling from $40 to $8. That's right. Hey, whatever your margin. What's it? Something margin. Macroeconomics. There you go. Thank you for chiming in. All right, so the bottom here, that was me turning bullish on commodities, but I just look at a secular bear market. Here's an ABC pattern, corrective in nature, ABC again on a weekly, and the C up here is 1513 on here. I was only looking for 1400 here, so you know, whatever it is up here is if we get here, whatever if we do. Um, it's just corrective in nature because I want to start accumulating commodities again after the next recession and then start really hard after the peak in the real estate market in 2024. All right, I'm going to leave you with that. I'll post this, and like I said, for you current up-to-date subscribers and stuff, I'll send out a link to the webinar and go from there. So everybody have yourself a wonderful Tuesday, the 25th of April, 2017. Toodles.